Hello everyone. In this video, we will be seeing how to use bullish candlestick patterns to buy stocks. So, what are candlestick charts first? Candlestick charts are a type of financial chart for tracking the movement of securities. They have their origins in the centuries old Japanese rice trade and they have made their way into modern day price charting. Some investors find them more visually appealing than the standard bar charts and the price actions easier to interpret. Candlesticks are so named because the rectangular shape and lines on either end resemble a candle with wicks. Each candlestick usually represents one day's worth of price data about a stock. Over time, the candlesticks group into recognizable patterns that investors can use to make buying and selling decisions. So, how to read a single candlestick pattern? Each candlestick represents one day's worth of price data about a stock through four pieces of information: the opening price, the closing price, the high price, and the low price. The color of the central rectangle, which is called the real body, tells the investors whether the opening price or the closing price was higher. This is bullish and shows buying pressure. The lines at both ends of a candlestick are called shadows and they show the entire range of price action for the day, from low to high. The upper shadow shows the stock's highest price for the day and the lower shadow shows the lowest price for the day. So here we have a black or fill candlestick means that the closing price for the period was less than the opening price, hence it is bearish and indicates selling pressure. Meanwhile, a white or hollow or a green candlestick means that the closing price was greater than the opening price. So as we can see here, we have a picture representation. This is a candlestick and this is the highest price. This is the opening price and the closing price. So this forms the real body and here is the lowest price for that day. So as we can see, since the opening price is above and the closing price is down, this is a bearish candlestick. And here we have the highest price, the closing price, and the opening price, and here is the lowest. So since the closing price is higher than the opening price, this is a bullish candlestick. Now let's here in this video we'll be seeing about bullish candlestick patterns. So to see some more about it, over time, a group of daily candlesticks fall into recognizable patterns with descriptive names like three white soldiers, a dark cloud cover, hammer, Morningstar, and abandoned baby, to name just a few. Patterns form over a period of 1 to 4 weeks and are a source of valuable insight into a stock's future price action. The bullish reversal patterns can further be confirmed through other means of traditional technical analysis, like trend lines, momentum oscillators, or volume indicators, to reaffirm buying pressure. There are a great many candlestick patterns that indicate an opportunity to buy. Before we delve into the individual bullish candlestick patterns, please note the two following principles. First is that bullish reversal patterns should form within a downtrend, otherwise, it's not a bullish pattern but a continuation pattern. Most bullish reversal patterns require bullish confirmation. In other words, they must be followed by an upside price move, which can come as a long hollow candlestick or a gap up and be accompanied by high trading volume. This confirmation should be observed within 3 days of the pattern. We will focus on 5 bullish candlestick patterns that give the strongest reversal signal. So the first is the hammer or the inverted hammer. The hammer is a bullish reversal pattern which signals that a stock is nearing bottom in a downtrend. The body of the candle is short with a longer lower shadow, which is a sign of sellers driving prices lower during the trading session, only to be followed by strong buying pressure to end the session on a higher close. Before we jump in on the bullish reversal action, however, we must confirm the upward trend by watching it closely for the next few days. The reversal must also be validated through the rise in trading volume. The inverted hammer also forms in the downtrend and represents a likely trend reversal or support. It is identical to the hammer except for the longer upper shadow, which indicates buying pressure for the opening price, followed by considerable selling pressure, which, however, wasn't enough to bring the price down below its opening value. Again, bullish confirmation is required, and it can come in the form of a long hollow candlestick or a gap up accompanied by a heavy trading volume. As we can see in this image here, this is here in a downtrend, and here we have the hammer signal, and this is followed by bullish confirmation that is leading to an uptrend. Next, let's look at the piercing line candlestick pattern. Similar to the engulfing pattern, the piercing line is a two-candle bullish reversal pattern, also occurring in downtrends. The first long black candle is followed by a white candle that opens lower than the previous close. Soon thereafter, the buying pressure pushes the price up halfway or more into the real body of the black candle. So here we have in this image the piercing candlestick pattern, and here is the bearish candlestick pattern, which is followed by the bullish candlestick. So here we have a chart representation which shows the inverted hammer, the piercing line, and the hammer. So as we can see, this here is in a downtrend, and we have the inverted hammer here, and then we have the confirmation bullish candles, and then it goes into an upward trend. Then again we have a downtrend, and then there's a piercing line. This is the piercing candlestick pattern, and this follows into an uptrend. And here is some range bound movement, and then another downtrend which ends in a hammer move. This hammer candlestick pattern again indicates an upward trend. So this is how it will look in a candlestick chart. So next, let's look at the bullish engulfing pattern. So this is a two-candle reversal pattern. The second candle completely engulfs the real body of the first one without regard to the length of the tail shadows. The bullish engulfing pattern appears in a downtrend and is a combination of one dark candle followed by a large hollow candle. On the second day of the pattern, price opens lower than the previous low, yet buying pressure pushes the price up to a higher level than the previous high, culminating in an obvious win for the buyers. It is advisable to enter a long position when the price moves higher than the high of the second engulfing candle. In other words, when the downtrend reversal is confirmed. So next, let's look at the Morningstar pattern. This pattern consists of three candles, one short-bodied candle, which is a doji or a spinning top, between a preceding long black candle and a succeeding long white candle. The color of the real body of the short candle can be either white or black, and there is no overlap between its body and that of the black candle before. It shows that the selling pressure that was there the day before is now subsiding. The third white candle overlaps with the body of the black candle and shows a renewed buyer pressure and the start of a bullish reversal, especially if confirmed by the higher volume. And here we can see in this image here the how the pattern would look. Here we have a bearish candle followed by a small doji, and then we have a bullish candle. So next, let's look at the three white soldiers pattern. This pattern is usually observed after a period of downtrend or in price consolidation. It consists of three long white candles that close progressively higher on each subsequent trading day. Each candle opens higher than the previous open and closes near the high of the day, showing a steady advance of buying pressure. Investors should exercise caution when white candles appear to be too long, as that may attract short sellers and push the price of the stock further down. So here we have the image of the three white soldiers candlestick pattern, and here is the bullish candles which are steadily climbing up. So here we have how the candlestick chart pattern, and as we can see, this here is going down in a downtrend, and we have the appearance of the three white soldiers candlestick pattern. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls, and you can learn robo trading software for free.